at the University of Pennsylvania, and I'm a former professor at Jefferson University in Philadelphia. I've been involved in the financial markets for over 20 years. I began as trading the futures and forex markets about 10 years ago, and I've been involved in the optimization of software systems for the last 10 years via mathematical modeling. And excuse the spelling on that, mathematical. Now, I just in listening to lots and lots of lectures, regarding trading software, I've come to the conclusion that we're in a very, very unique business. I mean, many vendors ask you to buy software or buy trading techniques that you cannot even see until after you buy them. They come with back-tested strategies and entries that have no mathematically quantified predictive value. And because they don't understand the mathematics behind the indicators they use, many systems are just plain broken. And I want to show you one of those. Now, it's the combination of any stochastic oscillator and Renko bars. And there's some pretty popular systems that will use support to support, resistance to resistance trading via the use of a stochastic oscillator. Now, this is any oscillator. It doesn't matter whether it's the stochastic, whether it's relative strength, whether it's the CCI. But if you understand the mathematics behind it, you understand why traditional Renko bars and oscillators don't work. Because a stochastic or any oscillator looks at the relationship between the high of the move to the close of the move, or the low of the move to the close of the move. Now, if you look at, and you can see from the formula, the percent K, which is the line that you look at, compares the current close with the low, or the highest move with subtracted by the lowest low of the move. But basically, it's the relationship between the high and the close and the low of the close of any given candle. Now, if you look at range bars, you can see that you get a high and a low and an open and a close on every single candle. That's going to be true of tick charts, time charts. You're always going to get those four relationships. But then, if you look at Renko bars, there's a high of a move and a low of a move, but there's no open and there's no close. You only get two of the four parameters that are required in order for the percent K or the gold line here to actually form an accurate oscillator line. So any system that combines this type of Renko bar with an oscillator system is just simply not going to work. So you have to be very, very careful and do your own due diligence on software systems and make sure that the indicators that are used actually are able to work appropriately. Now, there are really two basic underlying strategies that software developers take when they develop a program to define market direction, and more specifically to define a specific entry. Now, one is price action, and price action will trigger a buy or sell recommendation. And the other is indicator analysis, and that is some unique composition of indicator signals or some confluence of indicator signals will trigger a buy or a sell recommendation. And a further subdivision of that are those that recommend trading one time frame versus those that recommend trading multiple time frames to confirm the validity of your entry. What we have found via mathematical modeling is that price action alone does not provide you with low risk, high predictive value entries. Now, neither does any confluence of indicator signals. Now, if there was some confluence of indicator signals when the oscillator hit some certain value, when the MACD hits some certain value, now these are both momentum indicators, um, that would trigger a buy or sell with a high predictive value, then the market could be robot traded and for millions of dollars in profit. Now, people have been searching for hundreds of years, or I should say dozens of years, for some confluence of indicator signals that will give you that will trigger a blue dot buy or a yellow dot sell with the predictive value high enough to make you a profitable day trader, and nobody's been able to do it. So what we do is we combine all of these. Most importantly, we combine market structure. And market structure analysis, I think, is 80% of the recipe that goes into providing you with an entry with an extremely high predictive value for success. Indicator analysis is also important. In fact, indicator analysis confirms what market structure is telling you. If indicator analysis does not confirm it, then oftentimes it's best to stay away from the trade. And then third, you want to trade multiple time frames, and that's called fractal analysis. But it's very, very difficult to look at charts on multiple time frames at the same time. If you want to trade, say, crude oil, and you want to trade an 8 range, it may be necessary to look at a 13 range and a 20 run range at the same time to confirm your trading entries. It's very tough to trade multiple time frames and do your own multiple time frame analysis. So what we do is we have our indicators synthesize data from multiple time frames. So on your actual trading chart, the signals that you get from the indicators actually analyze data from multiple time frames. The platform itself will actually analyze data from 5 separate time frames. So we've combined all of these: market structure, indicator analysis, multi-time frame analysis, into a really simple trading platform that's been optimized mathematically to provide you with remarkably accurate trading entries. Now, our trading methodology, I'm very partial, and I believe our trading methodology is really the only successful trading methodology, though I'm sure that there are others. But we never call tops or bottoms, and I've never seen anyone successfully with a high predictive value be able to say when the market's reached a top or the market's reached a bottom. So we don't look to trade reversals. And we don't counter trend trade because we believe that institutional money is what defines the trend. And when the institutions create a trend, we want to be on board with that trend. And we don't want to try to counter the big money in a counter trend trade. And we don't try to predict breakouts. Now, a breakout can be based on market structure and oscillator analysis. But we don't trade breakouts. We are strictly trend traders. And as I mentioned, we believe that institutional traders set the trend, and we want to be on board with them. They're the big money. So our goal with our software is to define a trend early and for us to get on board at a safe place in the trend so that there's a very high probability that the trend will continue. So what we want to do is we get on board when a trend in clearly defined trends. So first let's take a look at this. Is simply a crude oil 8 range, and just take a look with no indicators. Now, it's very, very difficult to define market structure, and although I am a big proponent of analyzing dojis and engulfing candles, which you see actually is an essential component to our trading, I don't believe that price action alone is going to be able to, in this case, predict this top, predict this bottom. I don't think that's enough. So what we've done is we've added a 50 period moving average. When it's moving up, it's green, and when it's moving down, it's red. We only buy above it, and we only sell short below it. We believe that bulls are in control above the 50, and bears are in control below the 50. So we believe if you take a short above the 50, you're counter trend trading. If you take a long below the 50, again, you're counter trend trading. And we never counter trend trade. And then we've added what is known as a modified 15. It's a 15-period moving average, but it's actually an amalgam of 3 separate lines. And in order for us to take a short trade, we want to be below the 50, and we want the modified 15 to be red. In order for us to take a long trade, we want the 50-period moving average to be green and the modified 15 to be green. And then what we've done, we've added pivots. And we never trade into major swing pivots. If we do get an entry as defined by the system that is going to trade us into an unbroken pivot, i.e. the unbroken pivot is within we're going to hit that first before we hit our first target, then we step aside on the trade. We also want to take a trade that's very, very tight to the modified 15. And we have an indicator that defines the distance between the open of the candle and the distance between the open of the candle and the modified 15 itself. We'd like this to be 1 or 2, but maximally it can be as much as 4 ticks. And then we look at fractal analysis. Now this is our 3-line indicator. The first line defines order flow. The second line analyzes stochastic direction. And the third line analyzes momentum direction. Now if the line is red, it means that order flow is down on all time frames analyzed by the indicator. If the line is green, you're up on all time frames. If it's blue, you're up long term and short down term. And if it's orange, you're down long term and up short term. Now, all of this is something that you don't really have to think about because the pertinent data is projected directly onto the price bars. So you don't even have to look down at the 3-line. The data, order flow, stochastic, and momentum are all projected directly onto the price bars. So you really don't even have to sit there with a crosshair and look and see whether you have 3 red lines, 3 green lines, 2 green lines, and a blue line. All that relevant data is projected up for you. And let me show you some trades. And then I want to go, actually what I want to do is spend more time on the platform, and I also want to show you our direct entry system, which is something that we offer that no other trading company has developed. Now let's take a look at this trade. Here's the market coming up to the 50. Now we define a break of the 50 as a 2/3 candle body close above the 50. Now it's better shown here. I'm sorry. Here. You can see that the candle is outlined in dark blue. And remember I said that the information that the 3-line generates is going to be projected onto the candles. And basically, the fact that the candle's outlined in dark blue shows you that order flow, stochastic, and momentum are with you on the trade. You've broken the 50 to the upside. Remember, we're only trend traders. So the modified 15 is green, the 50 is green. We have order flow, stochastic, and momentum with us to the upside, and up we go on the trade. We only trade with the trend. The same thing true to the downside. We need the modified 15 red. We need the 50 red. We need a clean break of the 50, which means that 2/3 candle close. Candle body close must be below the 50. We're in 1 tick below the close of the candle, and down we go. So again, we don't have to look at the 3-line indicator and figure out if all these lines are red or they're not. It's all projected directly onto the price bars. Now, all of these signals develop intra-bar. So you know that this candle, if it closes to the downside, is going to be highlighted or surrounded in yellow. So you have your sell stop sitting there waiting for the candle close. And if the trade, as we call it, matures and the candle closes to the downside exactly where we want it, you're in on your sell stop, which is placed one tick below the close of the candle. We don't take limit orders. We take buy stop and sell stop orders in order to basically eliminate slippage. Here's another trade. In this case, it's a break of the 15. And you'll notice that, as always with our trades, our 50 is down, our modified 15 is down. We have a 2/3 candle body break of this trend line. We never trade into unbroken pivots or unbroken trend lines. The candle is outlined in order flow, stochastic, and momentum. We've got a yellow candle body. Now that defines the predictive value of the trade. We're trend trading. We know that on multiple time frames, order flow is with us, stochastic is with us, and momentum is with us. And we're in the trade one tick below the close of the candle. Our range maker tells us that, and I'll show you that on the chart. So we have our sell stop waiting, the trade hits, and we're down, and we have a trade to the downside. This is just another trade to the upside, same principle. Now what we really do is we look for on most of our trades, our bread and butter trades are our retracement trades. So what we do is we look for a break of we can't take this break of the 50 because the 50's up. And remember, we only trend trade. We need the 50 down, the modified 15 down, and the 50 down in order to take a short trade. I mean, the rules are very simple. If we get a break of the 50 and the 50's rising, we can't take a short. We have to wait for market structure to align. And market structure is key because the 50 defines momentum and the 15 defines momentum on different time frames. So if momentum is to the upside on the 50, but the modified 15 momentum is the downside, then you have conflicting conflicting data. You want momentum to be down on the 50 and the 15. You get a break of the 50, a retracement. Now these letters are plotted by the software. I didn't put them in here. An A will plot anytime two candles of the same color appear. That defines a downtrend or an uptrend. A B, which I have used in my settings, I decided to highlight and make cyan. And that's a pull-up in a downtrend. Now these are all people who are trying to call a market bottom. And what they're doing is the market's coming down. They're in this B candle, it's a long candle. And then what we wait for is to all these people to be engulfed by the C. Now when the B prints, there's an audible alert which tells you that there's a potential for a C to engulf all the long people, all people who have taken long positions in B. And we wait for that to happen, and the C engulfs, and we're in one tick below the close of C. And you can see that C came with the 50 down and the modified 15 down. Again, we are purely trend traders. Again, the same kind of trade. We have a break of the 15 and the 50. We wait for a retracement. Now, all the people in this B candle, this is a long candle, and these are people calling market bottoms, all unsuccessfully. They're caught long here. Then they're engulfed to the downside as new sellers come in. And remember, this is institutional money that's creating this short trend, and we don't want to counter trade. So we're in one tick below the close of C, and down we go. Again, the same kind of trade. We have a break of the 50 and the 15. For most of this trade, you can see that The modified 15 is down, the 50 is up. Get a break to the downside. We get a retracement right into the modified 15. The 50 is down, the modified 15 is down. C engulfs all the traders in the B candle, and we have a nice short trade. Same thing here again. Break of the 50 and the 15, retracement into the 15. We overrun these people in the red candle trying to call a top, and up we go. If we get stopped out, we get another retracement. This is a momentum signal. You can see the candles outlined in light blue, which means we have order flow and momentum with us. And off we go to the upside. Same variation on a theme. We get a break, retracement into the modified 15. Momentum signal is the X. Candles outlined in order flow and momentum. And down we go. All trend trades. Again, a break, retracement into the modified 15. 50's up, 15's up we go. Again, break of the 50, we can't take a long trade. The 50 isn't green. We wait for a retracement, right back to the 50, up we go. Retracement back to the modified 15, up we go. We're trend traders, and we're looking for a retracement right back to support of the modified 15. Here it is again. Break to the downside, retracement, power entry, down. We go all the way down to here, retracement into the modified 15, down we go. Same thing again. Break of the 50, retracement. This is strategy entry, right back into the modified 15, and up we go. These are dual signals. We're getting a break of the 50 and the 15, retracement. This is not only a C candle, it's also a strategy entry and a momentum signal. The candle's outlined in blue. You have order flow and momentum. Up you go. Retracement into the 15. Up we go. Same thing here. Here we get the break of the 50, but the 50's rising. We want to wait for the 50 and the 15 to come into sync. Right on this candle here. This is a trade we took in the room, in the live trading room. We have the 50 red, the 15 red. We have a break of the 15. Candles outlined, order flow, stochastic, and momentum are to the downside, and down we go. Now we further define, we further enhance the predictive value of the trades by looking at we don't believe that the oscillator in any way helps the predictive value of the trade. Some people will use an oscillator when it becomes overbought. They'll continue to buy every time you break a high pivot. Other people will use Oscillator Divergence to try to call a top or a bottom. What we found after doing a year of market analysis is that an oscillator doesn't add any predictive value to the trade. So what we found is we want the difference between the 50 and the 15, or the MA diff, to be 16 or less. This also shows us the slope of the modified 15 and the slope of the 50 period moving average, and we use those as well to help define the risk of the trade. Now, to further enhance the predictive value of the trade, we also look at multiple additional time frames, and that's the background color. Now, the background color, when it's pink, tells you that order flow and momentum are with you on multiple, even higher time frames. When you have a pink background, you have order flow and momentum with you to the downside on 5 time frames. When it's green, you have order flow and momentum with you to the upside on 5 separate time frames without having to look at 5 separate charts. Now we trade multiple lots, and on a couple of markets, on the Russell and a gold, we trade a 13 range candle. So we have an initial 15 tick stop. We take 2 contracts off on our first target of 9, 1 contract off at our second target of 15, and 1 contract off at our third target of 22 ticks. At the first target, our stop moves from minus 15 to a 9 tick trailer. Now what I want to do now, before I go any further, is I want to show you the trading platform. So I'm going to drop the slides temporarily. I'm going to reshoot the screen. Okay, there we go. Now, let's take a look first at the Russell. Now, the Russell opened this morning at $9.30, which I'm trying to find here. It opened up very strong. Now let me just change this. I'm sorry. This is an 8 range. The Russell we trade is a 13. So let me just switch it. Here we go. Now here is the exact trade that I was telling you about. What we do is wait for a break, and we wait for a retracement. Right here. You're in 1 tick above the close of the candle. That's a 50 tick trade. Now, this was a more aggressive trade because remember I told you that we want to trade deep into the modified 15. We want to trade off support. This candle is a little bit far off the modified 15. If you took it and you were a little bit more aggressive, it would have been another winner. Remember, it's a retracement trade with the trend. And that's the only kind of trades that we take. This would have been a 24 tick trade. But we're trading with the 50, with the 15, and we're taking retracements into the trend. You can see that this is outlined in light blue. We have order flow and momentum with us. This is simply based on market structure, this entry right here. And I think that was it for the Russell for the day. Yep. So we were 2 great trades on a 13 range. Now let me show you crude oil. In fact, let me go back to the Russell yesterday. I don't think there was any much yesterday. This was yesterday. We had it. This was a trade I called in the room. Here was a break of the 50 right at the open, the retracement right into the modified 15 and up for 18 ticks. Now, this was a trade in which it was getting long in the day, and I closed it at -2 and it went 33 ticks. You know, so how are you going to figure? But I'm just showing you exactly what I did in the live training room. This is a 33 tick trade. I'm sorry, 22 tick trade that I closed at -2. And that was it for the day. And those are the trades I just showed you. Now this is the 8 range this is 8 range crude. This is how we did today in the room. Today we had three trades and 3 winners. And as soon as we do that, we stop. It's based on money management. Here was our first trade this morning. Now, I don't know that anyone that actually shows you the live trades they took in the training room. But there's the break and the retracement. Deep into the 15, and it went up for 8 ticks. And you see that it hit this pivot, and this pivot prevented this trade from going any further. Now on an 8 range, our first target is 5 ticks. We trade 4 contracts, 2 off at 5 and 2 off at 10. So this gave us a first target win. Then we waited for the, let me take these out just to make this trade a little clearer. What we had was this candle broke the 50, but the modified 15 here was yellow. Remember, we only trend trade. We need the 50 and the 15 to be the same color. So we couldn't take this break. So we had to wait for a retracement, which we got. And on the close of this candle, we had the 50 and the 15 both red. There was our okay to trade. Now you see, if we would have taken this, we would have gotten stopped out. If we waited, we got 10 ticks. Now we go to break even on our first target of 5. This stutters, chopped us out of the trade, break even on our third and fourth contracts. So even though it was 10 ticks, it was just a first target win. And that's how we calculated the equity. And then, remember I showed you, came up, we had a break of the 50. Now, the fractal indicators recalibrate when you close the platform. It's the way the actual Ninja platform is written. When this trade was taken, it was taken with order flow and momentum to the upside. You got a break of the 50, a break of the modified 15. They're both green. We were in, and the trade won 28 ticks. So with this, and this was our whole day. We had 8, 10, and 28, and we were done for the morning. And that was it. We had a net equity of $500, 46 net ticks. The net ticks in no way correlate with net equity. We had 2 first target wins for 100. We had a second target win for 28 for 300. We have an auto trader that does the same thing that I'm telling you now on a very conservative basis. It had 2 winners and 1 loser for net equity of $200. Now let me just go back and show you some more trades. This was yesterday. This is the kind of trade we're looking for. And we have to wait for the market to align. You see, this is a break of the 50, but the 50 is down and the modified 15 is up. We can't touch this trade. We have to wait for the 50 to be green and the 15 to be green. We need an entry right off the modified 15, which we got. So basically we had to move up. We retraced right back into the 15, and we went up for 24 ticks. Here was a bona fide break of the 50 with the 15 down. We took the entry 1 tick below the close of the candle. It went 6. I love these trades. Usually they go further. They didn't this time. This is a break of the 50, a retracement right back to the 50. And remember, in order to trade, we need the 50 down and the 15 down, and this gave us another 6. Then I took this retracement, This is a little bit of a riskier trade because the 50 was green, but it was flat. But the 15 was coming down so hard, I took the risk, and it went 11 ticks. And remember, 10% of what we do is discretionary. And then we had another trade. Move to the downside. Retracement, we want to take the trades right off the modified 15, not hanging signals like this. And I pointed this out in the room. This is way off the modified 15. Now, if I go all the way to the right, you see here that we have the range maker. The range maker tells you where the candle is going to close to the upside and close to the downside. And this indicator right here, which is a 5, tells you where the open of the candle is in relation to the modified 15. So you want to take an entry when it sets up with this number being 4 or less. Optimally, you want it to be 1 or 2. You want to take the trades very, very tight to the modified 15. Now I want to show you a piece of software that we use in the room. This is our direct entry system. Now what we've done at Rightline is in the room, we always have people that, I'll call a trade, they'll get up and they'll walk away from the computer, or they will, they may not hear it, they may consider it to be a fast call. So what we've done is we've developed our own Superdome. And I want to show that to you. Now this is called our direct entry system. Just hang on 1 second. I'm just connecting it for you. All right, we've got to wait for we have to wait for crude oil to move 1 tick to engage the system. So, while we're doing that, let me go over some more trades. So I don't want to waste the time. I was worried about that in showing this in a dead market, but crude does trade even though the other markets are closed. Let me just show you a few more trades, and then we can I can take questions. Okay, the system just came on. Now, here is the Rightline Superdome, and here is your Superdome. Now, let's say that I call a trade in the room. What I do is let's say we want to take a buy, and we want to take a buy stop right here at 105.32.
Order pending.
You'll see it came right into the Superdome, and that is going to do exactly on your Superdome what it just did on mine. Now it's not taking the trade because the trade is just dead. And the market's not moving. Now I can close the trade.
Order canceled.
And then let's say I want to take a sell at 105.28.
Order pending.
That trade just appeared on your Superdome. So not only do I call the trades out in the room, but I actually put them directly into your Superdome. Now this market was moving, you'd see the trade execute, you'd see the ATM strategy evolve, and you'd see the whole system work. So there's no missed calls in the room. I want to close the trade. Now, actually, let's see if this hits, and then you can see our ATM strategy quickly. We're not going to. Well, now what I can do here is I can click.
Order canceled.
Move.
Order pending. Order canceled. Order pending.
All right, there it goes. It's executing right now. So basically, on the right line system, I was able to insert the trade directly into your trader. Now I can exit the trade also if you give me the authorization to do so. It's a default setting in the system, but if you would also like me to manage the trade to the point where I'll actually close the trade, let's say we want to take a 2-tick profit. I'm going to exit the trade.
Order target filled.
And the trade just closed. This is our direct entry system. So there's no missed trades and there's no late calls. If I can't get the trade into the system, then we don't take it. Now, what I've seen with vendor after vendor is they give you areas. Well, you know, this is a kind of a great place to go short. This is sort of a great place to go long. But here we give you the exact entries. And not only do we give them to you, but we put them into your Superdome for you. So there's no problem with, well, did the call come in late? And there's also no problem with you walking away for a minute if you have to, because I'm going to execute the trade for you, and then the trade's going to mature. You pick the number of contracts. You pick the ATM strategy. That's all under your control. If you want me to exit the trade for you, possibly we're up 6 or 7 ticks and I don't want to wait to go to a second target, I can exit that. But that's optional and in your control. And ultimately, the Superdome remains in your control. If you want to close a trade, you can do it. If you want to stop, if you think a trade that I'm taking isn't optimal, you could stop the trade also. So you remain ultimately authoritatively in control. But if you let me, I will put every entry that we take in the room into your auto trader. Now I'll just show you right here. Okay, they were time stamped. Each of these trades this was DL long, DL short, and DL long. They were all stamped. Now what I want to do is I want to go back to the slides. I think I'm going to have to reshoot the chart. Just give me 1 second. One sec. Just going from slides to platform and back. Take me a minute. Okay, here we go. All right, hold on a second here. Something happened. Give me 1 sec. Okay, here we go. Now, trading 4 contracts. James, just hold all your questions. At the end, I'm going to answer everything for you. Don't worry about it. Don't worry about the questions. Trading 4 contracts since January. You would be up close to 20. You would be approaching a net equity of $25,000. This is in our live trading room, and the results are all posted. We do a day-by-day net equity in the room. And if you go to YouTube, you'll see that about 75% of our trading days, I actually record and post to YouTube. So you can see all our entries, see our exits, see the rationale for the trades. On a starting portfolio of $4,000, which is about the net equity, the margin requirements you need to trade 4 contracts, you'd be up close to 600%. Our auto trader trading 3 contracts is up close to $10,000 through April. We didn't recalculate for May and June just because we did not have time. Auto trader percentage also approaching 600%. It just trades 3. We've now recalibrated the auto trader to trade 4. Now, what do you need or require to become a professional day trader? Most importantly, you really do need outstanding software. I mean, that's what does 90% of the heavy lifting. No software can do 100%. 10% of what we do is discretionary. And you saw today in the trading room, I took a short trade where the 50 was green, but the slope, if you looked in the upper left-hand corner, was almost 0. And remember that the 50 defines momentum. And with momentum flat on the 50, but heavy and strong down on the modified 15, I took a successful short. So 10% of trading is discretionary. And when we're out there trading, we have to outfight the smartest and the richest people in the world who have very, very sophisticated trading systems. Remember, I firmly believe they set the trend. If you want to counter trend trade again, trade tops or bottoms, you're going against these guys, and they are going to take your head off. We see people in the room who, in an uptrend, we see a red candle. That's them trying to call a top. They get run over. Another red candle. There's another group of people trying to call a top. Another 3 green candles. These people calling tops get run over and over again. You have to stay away from trying to counter trend trade, because what you're trying to do is you're trying to take money out of these people's hands, and you can't do it. Unfortunately, we have to trade against the small guys, and the only way to do that is to trade with the trend. And you can only do this with software that provides you with that edge. Now, education is 10% of 10% of trading is discretionary, and education is really, really important. And we provide you with extensive videos. You'll see that as part of the package, you're going to get a 2-hour mentorship session with me, and we really, really do support our software really, really big time. Now, we never ask you to pay for boot camps. I mean, I don't even know what those mean. If we can't provide you with software and education that makes you an educational day trader, I'm not going to ask you for $1,000 to buy a boot camp on our system, because now you need to pay more to become a professionally successful day trader. We never ask you to pay for seminars or lectures. And the one thing that we do is our new indicator packages, and we come out with a lot of them. We're constantly upgrading the software. They are free. We never charge you for free for upgrades. There's never a 2.0 version where we ask you for more money. You become a part of our family. You get these free upgrades for life. Now, after this, I'm just going to I'll go over to questions, and I really do have plenty of time for that. Now, this is the special. What we're offering is the right line trading order flow exact entry software and the direct entry software. So you get those both. You get the video tutorials. You get a 2-hour session with me, and you get 1 month in the live trading room for free. And that special is $29.99. Now, what we would like to do is have everybody come into the trading room and see how we trade. We're going to email you right after the webinar a free software download. Normally it's 3 days, but unfortunately Friday is July 4th. So we can't go 3. This is going to be a very, very tough 2 days to trade because we're going into July 4th. But what we're going to do is we're going to remove the username and password from the room. You can just come into our trading room and see how we trade. We also have a free newsletter. So I don't want you to give me any money. This is no first 10 people will get this. There's no rush sell here. What I want you to do is I want you to come into the trading room And I'm so confident that you'll like our system that I strongly believe that you'll seriously consider buying it. Now, normally the live trading room is $249 a month on a lease. The auto trader, now we have the same system that auto trades. I have not gone over that at all. So I don't want there to be any confusion that I've in any way mentioned or shown you anything that has to do with the auto trader. Auto trader is a separate piece of software. People trade it usually on a separate account, and it takes a lot of the same trades that I do. And normally the live trading room plus a direct entry system is $399 a month. We don't sell the direct entry system, but we're offering it here as a one-time special for $29.99 along with our software on a lifetime lease. Now, if there are any questions, now's a great time to ask them. Let me take a look and see what is there so far. John, the auto. Okay, let me go up to James. I think Leo answered you, James, but I'm sorry. Okay, John, is the auto trader results based on the room trading hours? No, John. We have on the FAQ, we post the auto trader times. On the Russell, it's from 9:35 in the morning until 11:30. But they're all there. Now, the auto trader can be pre-programmed to go off and on twice in the day. And we strongly recommend that you turn it off 5 minutes before news and re-engage it 5 to 10 minutes after news. So you do have to do a little bit of work on the auto trader every morning. You have to check Forex Factory, see when there's, listen, if you're trading crude oil, if there's a crude oil inventory report, which usually comes out on Wednesdays at 10:30, you don't want the auto trader trading the crude inventory report. So you're going to turn it off at 10:25 Eastern, maybe turn it on about 10:40, and then let the auto trader roll. But the times that we trade the auto trader are posted to the website. Remember, the auto trader in the room's the discretionary trading. The auto trader is pretty separate. Okay, now I don't really see any other questions. Sally? Oh, I'm sorry, Sally. Sally, the special is going to expire on. We'll let you have the weekend to think about it. You're going to have 2 days in the room to see how we trade. I want you to come in on Wednesday and come in on Thursday. I'm really sorry we don't have a Friday. And then you'll have the weekend. And like I said, we're not into hard sell here. Think about it. See if you like our system and see how we trade. I think you'll be very, very impressed. Yes, you can, James. You can do that on a lease. You can see the live trading room and direct entry system is $399 a month. So you don't have to. So you can join the trading room without purchasing the software and also get direct entry. And you would do that on a lease. Jim, we're trading 3 instruments. We trade crude oil, we trade gold, and we trade the Russell. All 3 at the same time. Those are also the 3 instruments that the auto trader is trading. Rick, I'm not sure what products does this cover. I'm not sure what you mean by that. No, you don't, John. John writes, you need to watch level 2 window to look at the number of bids and offers to day trade. You don't, because line 1 of our 3-line indicator is order flow. And that's looking at the number of executed orders at the bid and the number of executed orders at the offer at each given tick, and compares it with those at the previous tick. So rather than look at depth, you're actually looking with line number 1 at actually executed orders. If you just go to our website, you will see the spreadsheet for our Actually, I think we've collapsed June now into the monthly because we've gone into July. But if you want us to, Mike, and you send us an email, we will send you the broken down daily results for our net equity in the room and our net equity on the auto trader. We have them. We just don't have them posted because of the fact that it takes up too much space, and we're now moving into July. As July progresses, you're going to see net equity for the trading room and the auto trader posted on a daily basis. Absolutely, Pat. It doesn't make any difference. Pat asked about trading it out of a Roth IRA. You absolutely can. It makes no difference where it's connected to. Well, the 15 is an amalgam, Daniel. It's an amalgam of 3 separate lines. It's not really just a moving average. It's a moving average in 2 other lines. And what we did is we smoothed it out. Because when the modified 15 is yellow, we don't trade it. That defines chop. We're working on it, James. I'm looking every day at the 610 ES, the 610 tick, and it's going to come online soon. You can listen, Rick. This software will trade any market. I mean, I would trade the Russell. I would trade the NASDAQ and other markets. I just can't watch them. It's too much for me to handle. Yeah, we did, Art. We went to a slower chart on the Russell because as the summertime progresses, the Russell's been choppier. There's less volume. There's less follow through. What I did was we back tested for 50 days and found that the 13 range Russell is much smoother. And it's actually more lucrative. First target of 9, second target of 15, and third target of 22 is much better than an 8 range. When you lease, do we have the software? 72 PC, I'm not sure what your question means. When you do the lease, will there be an instance when you will be in? Jim, yesterday was the first day that we were in 2 markets at the same time in a year. So it's very rare that we're going to be in 2 markets at the same time. Yesterday we were in the crude and the Russell at the same time. It is exceedingly uncommon. The 299 means that you will own the direct entry system and own the right line software that I showed you today during the webinar. And the trading room is you get 1 free month in the trading room. The direct entry is included, Jim. So you're going to be on the direct entry system for good. Well, listen, we have to be very careful with commissions. I agree with you. And that's why we went to a slower chart, Mike. We want to take fewer trades. We want to get a bigger profit margin. And I agree. I totally agree with you. You can absolutely use it for stocks. We haven't traded it with stocks. But listen, what's operational here, looking at order flow, stochastic, and momentum, is operational on any financial instrument. You can use it to trade treasury notes, bonds, the ES. No, thank you, Pat. I appreciate that. Dr. John, we don't. I mean, really, it's really incumbent upon me to be very conservative, take the most conservative trades possible, and get us winning days every day, even through the summer. The thing is that a lot of people in the room understand is that it takes a lot of patience, and sometimes we'll sit in the room for an hour waiting for a setup. But remember, we need the 50 and the 15 to come into alignment to take a trade. We trade with specificity, not sensitivity. If you want to get a lot of trades, forget it. This is not the system. If you want a lot of action, forget that too. It's not going to work. But if you're willing to sit on your hands and wait for the market to come to you, these trades are incredibly successful. James, on the ES, I'm evaluating the 610 tick. That's all. On all the other markets, which are momentum markets, I really like the 8 range or the 5 range. On the 13 range, we've got to change to a 15 tick stop because that's market structure. You're in one tick above the candle. There's on a long trade, there's an area of very minor support at the close of the candle, so your stop is one tick below. It's all based on market structure. The direct entry, we don't sell the direct entry itself. Now, I got 1 more minute. We don't sell the direct entry itself. This is the only opportunity you're going to have to own it. Is this a static dome, Leo, or a dynamic dome? On Ninja, we can trade the static or dynamic. The dome that we made is a static dome. It depends which lease, 72PC. I'm not sure which lease you're talking about. The net results are before commissions, Mike. And I know you're hammering at commissions, but I want to make it very clear, because this is a very transparent company. We are posting the net profit before commissions. No, you do not, Coyote. That the direct entry system doesn't know whether you're trading a static or dynamic. It doesn't know what your broker is. It is simply going to use the NinjaTrader system and feed that entry right into your Superdome. You absolutely can go to dynamic. You can. Correct. That's correct, 72PC. It's $3.99 with a direct entry. All right, well, listen, I got to stop. I don't want to run over. I'm at 3. If you have any other questions, you can call us. Leo, can you put the number in? Leo's going to put our phone number in. Just give us a call anytime. Send us an email. But if you come into the room tomorrow, you're going to see us trade. And I'm going to try to make it as educational as I can. Remember, I really want to focus on trading, but I'll answer as many questions as I can. But at the end, we do a recap. Just come into the room tomorrow. We're going to send you the link. There's no username and password tomorrow. I use AMP Trading, but you can use any broker you can. It makes absolutely no difference to me. All the brokers work fine. Just try to get the best commissions you can. It makes no difference. They all work. Listen, Kevin and Kathy, thank you so much for giving me your time. And I don't ask anyone to buy anything. Just come into our room, see how we trade, and make a decision for yourself. You'll see the direct entry system in action. You'll see the retracement trades. You'll see the whole thing. So listen, have a great afternoon. I really appreciate your time. Hopefully we'll see everybody in the room tomorrow. So everybody have a great afternoon. 8:45 Eastern time. Room starts. 8:45 Eastern. All right, listen, everyone. Have a great afternoon. Thank you so much.
Thank you, everyone, for your time and your participation here today. We especially want to thank Mark Sachs from Right Line Trading and all.
Hang on 1 second, Leo. All right, let me do it right. Shit. How do I freaking stop? Here?